We have a little bit of breaking news. For us precious metals lovers, this is breaking news. Which, before I get started, probably should see what the price of gold and silver is at the moment. Silver is up 51 cents to a new recent high of $15.73. Gold is now pushing $1,271, another high again, which also will now put gold into a bear market. And of course, silver comes along for the ride every time. Interesting news today. The gold ETF market breaks. According to Zero Hedge, BlackRock suspends ETF issuance due to surging demand for gold. BlackRock suspends ETF issuance due to surging demand for gold. If you're wondering, BlackRock is one of the club's companies. BlackRock's gold ETF IAU has seen fund inflows every day in 2016 with no outflows at all. And with the stock trading above its NAV for most of the year, the world's largest asset manager has made a significant decision. BlackRock says issuance of gold trust shares suspended. BlackRock says suspension due to demand for gold. But gold's an old ancient relic. Bernanke said it's not even money. Ron Paul asked him. And then said, why are you central bank stockpiling it if it's not money? Answer, it's just tradition. Ask them Canadians. Is it just tradition for you guys too? Hell no, it ain't. Why? Because they just sold their last ounce of gold. It's gone. As of yesterday, I think. It is all gone. And when I'm about to say the American people, when the Canadian people see how important gold and silver is in the future, what role it plays in the world in the near future, they are going to want to murder some politicians for selling the entire the country's entire amounts of gold. It's gone. Issuance of new IAU Gold Trust shares temporarily suspended. Existing shares to trade normally for retail and institutional investors on New York Stock Exchange, ARCA, and other venues. Suspension results from surging demand for gold, which requires registration of new shares. iShares Delaware Trust Sponsor, LLC, in its capacity as the sponsor of iShares Gold Trust, IAU, has, which I believe is the GLD, right? GLD and SLV, it's GLD, has temporarily suspended the creation of new shares until additional shares are registered with the Securities and Exchange Commission. The suspension does not affect the ability of retail and institutional investors to trade on stock exchanges. Retail and institutional investors will continue to be able to buy and sell shares in IAU. IAU holds gold as a physical asset. IAU is an exchange-traded commodity, or ETC, which therefore is not eligible for registration as an investment company under the 40 Act. IAU may only be registered under the 33 Act as a grantor trust. Under the 33 Act, subscriptions for new shares in excess of those registered requires additional filings with the SEC or Securities and Exchange Commission. This isn't to say that they're halting it for good and it's over. They're probably going to, as quickly as possible, register some new shares. Now, you would also think, being the club and all, they would have seen this coming a mile away. Every day in 2016, more shares sold, more shares sold, or people buying them, not old shares being sold. More people investing in them. Every day, the club would have seen that coming from a mile away. Let's tell our other club member at the Securities and Exchange Commission, we need some more of these shares rapidly. So here's the paperwork, whatever we have to do. That didn't happen. Maybe the club's too busy maybe the club's too busy with other crap. I really don't know. Nearly all other U.S. iShares are exchange-traded funds, or ETFs, registered as investment companies under the 40 Act. The 40 Act provides for the continuous offering of shares and does not require registration of additional shares as the fund grows due to investor demand in connection to new subscriptions. Since the start of 2016, in response to global macroeconomic conditions, demand for gold and for IAU, those shares, has surged among global investors. IAU has $8 billion in assets under management and has expanded $1.4 billion year to date. February marked its largest creation activity in the last decade. This surge in demand has led to the temporary exhaustion of IAU shares currently registered under the 33 Act. We are registering new shares to accommodate future creations in the primary market by filing a Form 8K to announce the resumption of the offering of new shares. The ability of authorized participants to redeem shares of IAU is not affected. It appears the huge demand for gold, physical gold that is, and lack of supply is finally catching up with the manipulation of paper prices. If this is anything other than a brief technical suspension, it could well unleash panic buying. As we already pointed out, there is no physical gold. Now, that's an interesting word to use in relation to precious metals. Panic from Zero Edge posted today when the Webbot said months and months and months ago precious metals and the word panic to acquire, panic to own. We would be hearing about those words in the news in the near future. This is the news. This is newsworthy information. It is posted today. The Webbot said months ago it would happen, and here's a first little blip of it happening. Webbot hit. Check. As we previously concluded, the reality that there are just 2 tons of gold to satisfy delivery requests based on accepted protocols should be in itself troubling. Ignoring the Latin question, why so many owners of physical gold are de-warranting their holdings. Considering there are now less than 74,000 ounces of registered gold at the COMEX, or just over 2 tons, we may be about to find out how right or wrong the skeptics are, because at this rate, the combined registered vault gold could be depleted as soon as the next delivery request is satisfied, or isn't satisfied. Meanwhile, this is how gold is taking the news. It would appear that some gold is still available. One just has to pay for it. And here's the jobs numbers, and then the gold response. And what was this other one I want to share with you? COMEX gold cover ratio, open interest to registered gold. Look at all these years, 2003 to 2016. And look at those last 2 years from 2016 and prior. Just that little time frame. Record 542 ounces of gold claims per ounce of deliverable gold. So this is that paper to real thing ratio. It has absolutely exploded in 2016. It's like a straight shot up. They don't have to do that if they have the gold. But again, with their own numbers, which we have to question. They got a lot of paper out there, a lot of claims. That's 542 claims to the same thing of gold, 100-ounce contract, essentially. There should be 100 ounces of gold for every contract that's out there. And you mean to tell me 542 paper contracts are out there all chasing that same 100 ounces? This is their data. This is the club's data. What does that show you? It shows you that if they had more gold, we would see a lot more gold in the registered vaults. But we're not seeing that. We're seeing 74 roughly 1,000 ounces. Webbot said, watch the rise of Bitcoin, because after the rise of Bitcoin, Silver is going to make a big move, gold with it, but it was really focusing on silver. Both of them are up pretty nicely today, I might add. And again, if you look at their prices right now from the lows in, I think, December of precious metals, both silver and gold, it's a nice hefty move up. It is a hefty, considerable move up, talking percentage points here. So once again, I'm going to keep screaming it until the day where I tell you don't go out and buy gold and silver because it's too expensive. So since that day's not here yet, go out and buy some gold and silver because it's not quite expensive. You can still get it. Take care.